Oh, finally I got it. Okay. Hey, hello everyone. Sorry for being late once again. Because don't know why the OBS when I launch, right, it doesn't show that I'm live. I think something stuck hang there or whatever. So I'm late 10 minutes again. Sorry. Always like that. Yeah, don't know why. Next time I'll try to start, So next time I'll try to start the stream like 10 minutes earlier to be safer, So hopefully 10 minutes earlier, then things will be smoother. Okay, so let's do a quick test first. Mic test. Let me test a bit. Mic test. Good job. Okay, let me just test something first. Mic test. Mic test. Okay, I think we are good. Okay, I think we are good to go. Okay, so maybe just 1-2 more minutes. Okay, 1-2 more minutes we will start. Really apologies for the delay. Really apologies for the delay. Because don't know why lah, OBS just not kick starting when I launch it on the YouTube or whatever. Okay, so today got 3 things to cover. Okay, number 1, rolling options. Okay, I think rolling options is one of the most powerful and important strategy when it comes to option selling, especially employing the wheel strategy. At least that's my personal take, okay? And secondly, we'll probably cover some stocks. I think someone asked me, is SpaceX, ask me some SpaceX question, will I invest in SpaceX? Why will I invest in SpaceX? What was the rationale behind, despite it being like so, losing so much money? I think 100 times or 1,000 times trailing earnings or whatever. So we can talk a bit about that. And lastly, we can talk a little bit about the local context, which is like Singapore stocks. People love to talk about Singapore stocks, especially Singapore. I did a short saying that, sorry, chat, give me a while. Hey, I'm back. Okay, sorry, I'm back. I'm back. Please, I'm back. Okay, Ken. So with that, right, we have 3 things. Okay, options, rolling. Now, number 2, probably some stocks discussion, SpaceX. And then once market open in about 20 more minutes, then let's look at the market and see if there's any opportunity to do some cash cover puts, sell some puts, or potentially even close some positions. And of course, lastly, we'll talk about Singapore stocks. Okay, local context. Okay, I keep Singapore to the end because I know I have some viewers who are from the States, Australia, or even Asia, like Thailand, Malaysia, that kind. So they may not want to hear about Singapore stocks, So I will keep it at the end. Okay, so let's start with options, especially rolling. Okay, let's go. Okay, I switch scene so my face on top. Okay, the middle part is the market later open. My bottom third screen below is the positions I'm holding. Okay, so it's very open, transparent. You all can see the profit, the losses. What are the options I'm holding right now? Okay, so you all can take a look if you all want, and then you all can ask me questions also. Okay, so let's kick off. Later we will talk more. So firstly, let's talk about rolling options. Okay. So what is rolling options? Okay, so when you sell a cash cover put, okay, you sell a cash cover put. Example, let's just use Apple. Okay, cash cover put Apple. So you sell a cash cover put Apple at maybe okay, strike price, let's say $100, okay. Apple maybe at that time cost 120 or 110. You sell a strike price at $100, maybe you collect $50 premiums, okay. Now, if Apple dropped to $90 below your strike price, okay, below your options contract strike price, you will have to take the assignment, right? Because you agree, your options are contract, you sold one, you agree to buy 100 shares of Apple at $100 each. Now the stock market says that Apple has dropped to $90. You still have to pay $100 to buy. You have to accept it because it's the contract, right? You collect premium, very nice, very enticing time to pay your dues, okay? So drop to $90, you have to pay 90K to buy 100 shares of Apple. So you have to take assignment. Now, what if I don't want to take assignment, okay? Then what you can do is you close the contract at a loss. It will be at a loss, okay? Maybe you have to pay a couple of $100 or $1,000 to close the contract, okay? Remember, you sold a contract, then you have to buy it back, okay? So you close it, you pay $1,000, and then you accept the loss and move on with your life, okay? Maybe go to the toilet and cry, or cry on your bed, or cry in the work, okay? Do whatever you So that's how options work, okay? You either take assignment or you close the contract. Now, when does rolling comes into play? Okay, so in short, rolling comes into play when you do this kind of option strategy, right? It's when you don't want to take assignment, okay, but you want to minimize your loss, okay, minimize your loss and potentially make a profit. Okay, so that's where rolling comes into play. So let me give you an example. Okay, let me just give you an example. Okay, so example. Let's say you buy Apple. Okay, Apple contract. Apple, let's say whatever, maybe now is worth $120. Okay, $120. You sell a contract cash cover put for Apple at $100. Okay, so maybe you sell it at a 30 days to expiry, 30 DT. Okay, so the contract lasts for 1 month, and then you earn maybe the premium is $5 per share. Okay, so you earn 5 times 100, $500. Okay, remember, options contract are always dealt in 100 shares. Okay, so here we may talk about $5 per share, right? It just means that you earn $500. Okay, so you agree to buy Apple at $100. Now the stock price is 120. Then you earn $500 because you sold a contract for 30 days. Okay, so let's say, okay, example, let's say 2 or 3 weeks later, bam, down, Apple dropped to $80. Oh my lord! Because Apple dropped to $80, now the stock market value Apple $80. However, your strike price, right, your contract is 100. You have agreed to buy Apple share $100 regardless of the situation. That's why it's contract. Okay? So Apple dropped to $80. You don't want to buy Apple $100, right? Wow! My stock market now value Apple $80, you know. My contract is to buy Apple $100. Oh, I don't want to buy, pay so much money, I don't want to take assignment because I want to farm the theta or whatever. I want to farm the premiums. I don't want to take assignment. Can or not? Can. So that's where rolling comes into play, okay? So example, what you can do is, rolling in short means you close the contract at a loss and then you sell one more immediately at a further strike price and a further duration. That's why some people call it you roll down and out. Okay, roll down and out. So in short, close the current one at a loss, and then you sell one immediately at the longer further strike price to recoup the loss via premiums and potentially earn a little bit of money. Let me give you an example to clarify, okay? So after, right, let's say Apple has already dropped to $80, okay? So when Apple dropped to $80, you can do two things, two options. Option number one, you keep quiet and then let the option expire. You have to get assignment. Like I said, buy Apple stocks, 100 shares at $100 each. That's $10,000 because that's what you agree, right, to pay. Now, option number two is called rolling down, okay? Let me give you an example. So let's say that contract you have, right, okay, you sold that $100 cash cover put, the $100 strike price for Apple, right? You can maybe, let's say example, it costs you maybe let's just give you an example. Then there's $15 to buy back per share. So maybe the contract says that, oh, you don't want to take assignment, you have to close it at a loss and you have to pay $15 per share. So that will be like $1,500, okay? So your loss is $1,500. So you have to cough out $1,500 to close the contract, so you don't get assignment. But remember earlier you get $5 premium per share when you sold Apple first. So technically $15 minus $5 is $10. So your loss is actually $10 per share if you minus the premium you first collected. So your total loss is $1,000. So close the contract, end of story. But you want to roll. So when you want to roll, right, what you do is you quickly sell another cash cover put position. So example, let's say you want to sell a cash cover put at, let's say, maybe the strike price, let's just put it at a new contract, maybe $60 or $70. Okay, let's just make it easy. $60. So you sell another Apple contract, cash cover put with a strike price of $60. Okay, $60. So immediately, right? Okay, maybe the premium, to make it easier, maybe okay, let's say you get $15 premium per share. Okay, like I said, every time you sell a contract, you get premium, you get money. So now you sell another Apple, strike price is $60, you let's say get $15 premium, $15. But this contract duration may be 6 months. Okay, 6 months. So now you think, now that you earlier closed the contract earlier, you suffer a $1,000 loss. But because now you sold a new contract and you get $15 per share, meaning $1,500 premium. Okay, so with the new premium you have it now, 1,500 minus away the $1,000 loss, you have officially up $500, right? So you never lose money, and you actually earn a little bit of money, which is $500. But now you have another Apple contract which you are holding, okay, at a further strike price of $60, even though Apple is now $80, and the duration is 6 months. Okay, so that's what rolling means. Okay, technically it just means close your current contract at a loss and then sell one further away with a further strike price, hopefully able to cover your loss, or at least potentially give you an extra credit, meaning give you a bit more, like the example we use. Okay, you get $15 premium, cover your $10 loss earlier, and extra $5 keep in your pocket. You can use it to buy Subway, hot dog, wings and chips, or go IKEA, buy more hot dogs, Big Boss, that kinds. Okay, not Harry Boss, okay, buy meatballs. Okay, IKEA a lot of meatballs, very famous one. Okay, so now I just want to give you a little bit more depth about rolling. Okay, because rolling, some people just think that, oh, you close at a loss, then you sell another one to get more credit. So that mindset is a bit simplistic. Okay, when you roll, right, there are actually a lot of intricacy and nuances of the benefit of rolling. So cannot see just the superficial area, superficial level that, oh, roll, close, open, that kind. It's more than that. So let me share with you my personal experience on what are the benefit of rolling. Okay, so remember, every time you roll, right, when you, example, let's say you sell a further strike price. Okay, so like I said, Apple from $100 has already dropped to $80. Now you choose to sell a contract with Apple strike price at $60. So you think logically, Apple has already fallen from $100 to $80. What are the odds that it falls from $80 to $60? Much lesser, right? Like I said, yeah, stock can crash, yeah, of course. But what are the chances of stock keep going low all the way to zero? I'm not saying it's not impossible. Okay, bad companies can go from $100 to $0, yes. But a good company like Apple, from 100 to 80, what are the odds that it dropped from 80 to 60? Wow, a bit tough, right? So this is why rolling is so magical here. Okay, it increases your probability of being profitable, or at least being able to break even. Because here, like I said, option view strategy is not to chase money. Okay, you are chasing probability. You want probability to be high and favorable to you. So that's why rolling creates that. Okay, you are telling yourself that Apple from 100 drop to 80 can drop to 60 again. I mean, not impossible, but unlikely. Okay, so that's the concept here of rolling. You are putting probability into favorable to you. Okay, in short, you are changing the probability, to a higher percentage for yourself to make yourself more profitable. Okay, so that's one thing. Okay, so number two is also the concept of duration, okay, time element, time, okay. So remember now you have 6 months, right? Because you sold a longer contract, 6 months. You once again think logically, okay. A good company like Apple, Microsoft, Alphabet, or whatever, like, you think, even ETF, okay, ETF, well, SPY 500, basket of all the 500 companies. You think logically, you look at the past historical trend. Good companies usually do what in the long run? They usually trend upwards, right? Like baby like that. At first they crawl, 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 crawl. As they grow up, they walk, walk, walk. As they grow bigger, right, they grow stronger and taller, they can start running. Same thing, you go and look at the past historical prices of all these companies. Like example, Apple. Last time maybe, $20, $30, $40. It slowly creep up to few hundred, then stock split, stock split. So in summary, right, given a longer time duration, generally company will trend upwards. Once again, if Apple, for example, recover from 80 back to maybe $110, your current option contract, which you sold at strike price of $60, will likely expire worthless, and then you're good to go. Okay, so remember, rolling has two more nuances benefit. Number one is probability. You're putting probability into higher, more likelihood for you to succeed and to stay profitable. So that's one thing, increasing your probability of doing well. Okay, now number two is the time. You're putting time on your side. Remember, every time you sell options, right, time is actually on your side. Okay, as you move along, do your things daily, go eat, go run, go jog, go walk, go look at JAV, that kind every night. JAV always stands for Jackie Chan action video, okay? Don't think too far, yo. So Jackie Chan action video, very fun, right? Wow, every night, wow, the fighting kung fu, that kind, wow, his show very entertaining. Okay, so let's when you have this time, right? So as you pass, you continue to do your things, right? Time is on your side, so you can afford to just wait, sit and wait. And then as time decay passes, 6 months later, oh, contract over, expire, worthless. I have collected the premiums. Okay, now the same goes for the opposite. The person who buy the contract, right, has time working against them. Okay, selling option, time is working for you. Buying option, time is against you. Okay, remember that, because time decay means your option become worthless, gone case. Okay, so I hope I give you some in-depth explanation about this powerful strategy of rolling. Okay, and that rolling is not just, I know some people say that close and then sell new one. No, you are not wrong to say that. Okay, but if you have been selling options long enough, the wheel strategy long enough, I dare to say all these tiny little, not tiny little, tiny bits of the benefits, the pros and cons of all this wheel strategy rolling, right? You will start to appreciate that. So remember, rolling is more than that. Okay, there's more elements to that. There are some benefits that you have to think deeply and think further that will improve your strategy, and it will level up your option selling capability. Okay, so I'm not financial advisor, don't quote me, okay? I'm not here to give financial advice. Don't call the government or police or CIA on me, okay? Don't call them, okay? I'm not licensed. I'm here just to share with you what I do, my personal take, and what I have learned throughout of years of option selling. So personally, if you want to get into option selling, especially utilizing the wheel strategy or anything, okay? Personally, I feel rolling is one of the most important strategy. Okay? There are many other rolling style. Okay, even covered call can roll. You can roll up, roll down, or roll up and out, roll down and out. So there's many terms. Okay, be it roll up, roll down, okay. But honestly, the most important is roll down. Okay, especially selling cash cover put, which is I mentioned earlier. Roll down, especially roll down and out, especially rolling for a credit, which I mentioned earlier. Roll further away, to the point whereby you have a far strike price and you're actually not able to just cover your loss earlier, but also make a small amount of money. Okay, the earlier one I just gave an example. Okay, even if you roll for a $2 credit, right? Let's say you cover your loss and you make like $100 or $200, it's still worth it, right? At least you never suffer any losses, and at least you still make some money. Okay, so that's all for rolling. Okay, let's just see if you have any questions about rolling, can ask me. and then I hope I'm able to answer your questions. So hopefully I managed to give you a clear enough example, okay? I mean, I don't want to say more, if not later very confusing. People also don't want to hear so much, you know. That's why I usually have just 3 segments on my for my streaming. I just keep it to 1 hour. So each segment, maybe 10 to 20 minutes, I just talk about that part. So in case you're just interested in that part, you just listen to that part, then you can move on with your life, okay? Because I don't want to hold you back, because I know most of you all watch me for my shorts, not the long video, right? Mostly I do shorts, mostly, !aiya! Come on lah, faster lah, give me a few minutes, I'll watch that and go off already, I'm busy, okay? So that's all for my first segment of this stream, rolling options. Okay, so let me just see if any questions I try to answer, okay? Give me a while, huh? By the way, I know sometime I mean, I started my stream like 2 days ago lah, so called officially lah, okay? I mean, previously got some test. You know, sometimes you want put messages I miss, you know. So yesterday I know I have some messages, okay? Yeah, I just want to say I miss a few, so I just want to say hello to, hello to Fatty B9M talking about leverage. Yeah, yesterday we talked about the concept of leverage, so I missed a message. I just want to say, yeah, I hear you, I know you're also doing leverage, so all the best to you as well. Because, yeah, I agree leverage is key also. Okay, can. So, let me see. Hey, Emuna Pam. Hi. Hey, thanks for dropping by, Emil. Emil, is it your pronunciation? Emmanuel. Okay, Emmanuel, okay. Or call you Pam, is it Pam? Okay, thanks for dropping by. Very nice to see you. Hi. Good to see you as well. By the way, if I miss your message, like I said, please just repeat it or put it on again so I can see it, and then I will respond. Okay. But sometimes please forgive me because sometimes this OBS I don't know why I cannot see your messages. Like now I see this one I cannot see the messages, but I see from this screen below people got say hi and say hello, all these things. Okay. Okay, can. Like I said, if I miss messages, forgive me, okay? Okay, come. Let's move on to the second part of the stream, okay? Okay, so second part I want to talk about is stocks time, okay? By the way, market opening. Later we see got any opportunity to do some trades on the market. Okay, so next time I want to talk about SpaceX. Okay, SpaceX, okay? No. SpaceX by Elon Musk, okay? So someone actually, I don't know, is it Instagram or TikTok okay? Or YouTube, okay? Someone asked me, hey, SpaceX can buy, what are your thoughts? And would you be buying SpaceX? So let me just share with you my personal thoughts on SpaceX, okay? So firstly, let's just quickly understand what is SpaceX. SpaceX has 3 main components, okay? The Starship, okay, which is the space, the rocket launching, all these things. And then second one is their Starlink, which is like their cash cow, okay? Starlink is actually profitable. It's the satellite internet, whereby they provide all the satellite internet across all the entire world, okay? Elon Musk made that, okay? On the airplane, on the cargo, on ship, on cruises, on the remote island, you can get internet access because of the satellite. So this one is actually very profitable. I think 60-70% profit. I don't know about that, but very profitable component of SpaceX. Now the third is their XAI, so-called Twitter in the past, or X. It has also the AI component, the group, all these things. So these 3 components made up SpaceX. So the 2 components are not profitable, which is the rockets and the AI itself. Okay, they are not profitable. Only the Starlink Starlink, the internet, the business is profitable. So overall, right, SpaceX is not profitable. Okay, when it first launched in IPO, I did a short, right? I say that they have got their valuation back then was, I think, 1.5 trillion, I can't remember when its IPO was 135, okay, or 125, I can't remember. Okay, it was priced at 100 times trailing earning, insane valuation, okay. Back then, one of the reasons why the price went up so high is because some of the funds like Russell, certain MSCI, ETF, right, they included into their component. So that's why they were buying aggressively, because it's part of the rule. Okay, certain index got certain rules. If they decide to include that particular company into their index, right? Okay, index, then they have to buy. Okay, no choice, have to buy. So if you are one of the index holder, tracking like example Russell or whatever 100 or QQQ that kind, I'm not sure all, okay, but if the particular index tracks the top company, which includes SpaceX, you have to buy, no choice. So that's the reason why SpaceX went up to almost 150. Okay, at the start it was booming, but now it has crashed about $100. So that's the fundamental of SpaceX. Okay, that's the business part component. Okay, so personally, right, I think SpaceX is really overvalued. But if it drops to like $50 or $75, right, I will consider. Why? Okay, now I share with you my reason. Okay, why I will buy SpaceX. Okay, firstly, my personal investment rule is that I cannot predict the future. So I don't know which company will do well, and I also don't know whether SpaceX will do well next time. Maybe 3 years later, SpaceX maybe make Mars livable. Everyone want to go Mars to explore. So instead of going to Hawaii, instead of going to a Caribbean or Pirates of Caribbean, or going to Thailand, Vietnam, or going to China or Singapore, Malaysia, people want to go to Mars. They want to go explore. Maybe Mars got party, the party more fun. Mars, maybe gravity lower, can jump 10 times higher. People want to go and have fun. So they decided to travel to Mars next time in 3 to 5 years. You don't know. It may happen. So like I said, I cannot predict the future. And remember, SpaceX has the AI component, which is the XAI, okay? Group, okay? So like I said, I cannot predict the future. One of the rule in my investment thesis, okay? I always stick by it. And because I believe tech is the future. So who knows in the future, SpaceX, the XAI become very valuable. Let's say they discover something or develop something like almost like NVIDIA, that kind, okay? Maybe instead of Vera Rubin, they got Ultra Topaz, Ultra Sapphire, okay? And they become very valuable suddenly. So that's why, as someone who believes as tech as the future, but I also acknowledge the rule that I cannot predict the future entirely. I only can foresee what is likely to happen in the future, which is heavy usage of technology. But I won't know which company will do well, which company will have new discovery. So that's why I'm happy to include SpaceX, because I believe that, right, with Elon Musk as the leader, okay, I think he can bring SpaceX to potentially great height, especially the XAI element. Who knows, they discover something and do something great in the future. So if SpaceX ever drop to $50, I'm happy to put some into my portfolio. Just like Intel, I think 1 year ago I talked about Intel, it dropped to $30, right? I mean, then the US government wanted to buff it up, buff it up with having a stake in it. Then Nvidia want to come in. That's where I saw opportunity in Intel back then, because it's only $30. Yes, I know Intel was negative P, they are loss making, but you think about it, it's only $30 per share, and even if you buy 100 shares, it's only $3,000. And like I said, Intel regardless is a CPU maker, and they have huge facilities, support to make the chips if needed. So who knows, 10 years down the road, Intel can do very well. You don't know, you cannot predict the future, right? I wouldn't know Alphabet and Nvidia would do so well in the long run also. I only can foresee what will likely be the trend 5 to 10 years, but I cannot tell which company do well. So example, Intel I bought back then, right? It's $30 only, and I get to diversify. And if Intel do well in the years later to come, right, I will benefit. Like now Intel is almost like $90, $100. Yeah, but of course I won't sell them or just hold them forever, because who knows, 5 to 10 years later, Intel become a $1,000 company. So same principle and concept I applied for SpaceX. Okay, personally, I cannot predict the future. I believe tech as the future, and who knows, SpaceX could do something great in the future. So that's why if the valuation come down like $50, right, I will definitely buy some. And honestly, okay, let's say example, let's just say example, you have a big enough portfolio, right? Taking out a 1% or 2% of it to buy some like SpaceX, Intel, I don't think it will hurt you, to be honest. Okay, so let's say example, you have a 100,000 portfolio, okay, don't talk about 1 million, let's say $100,000 portfolio. If SpaceX dropped to $50 and you buy 100 shares, it's only $5,000. I know $5,000 of 100,000 is like what, 5%? 5% only. I mean, if your portfolio is 100,000, I'm sure you can generate like maybe 10% a year. You decide to, oh, maybe I just buy like, 100 shares or maybe even 50 shares, 2.5%, 2,500 into SpaceX because it only costs $50 per share. No problem, right? It doesn't hurt you, it's just 2.5% with the potential of doing well in the future. Okay, so that's all my take on SpaceX, okay? So if you want to know why would I be interested to buy SpaceX in the future, those are the reasons. Okay, to ask me to buy SpaceX now, no way because SpaceX now cannot really too expensive it's just way too pricey for me now personally. Okay, my take okay, because SpaceX now I think just way too costly right now. So if I ever touch SpaceX is if the valuation really deep, okay, really have to deep enough, low enough, because now SpaceX what is the rush to buy? They are not profitable you know, they are loss making. Yeah, so not profitable you know, I just feel okay personally SpaceX has more room to drop, okay. So that's all my take for SpaceX, okay. Any questions can ask me, okay. I will try to respond, and then before we move on to the next part, so let's just have a quick chat, okay, and then see who. Hey, the Quiet Freedom Project. Hi, nice to see you. Hopefully those previous people who are on the stream, if you are free, you can drop by, because I know some of y'all previously dropped by. So if you are around, please say hi. Happy to see y'all and chat with y'all. So thanks for dropping by as well. The Quiet Freedom Project. You can share with me Quiet Freedom Project if you own any stocks as well, or if you own any SpaceX, okay, or if you're an option trader, you can let us know what stocks you buy or what shares you're holding, what you're looking at. Because sometimes I feel it's very good to have a conversation with you all. That's why I really value quality conversation with you all, be it through comments, chit chat message, or streaming like that. I also learn a lot from you all, to be honest. Like example, some of you all share me things like some of the energy stocks, because I talk about wanting to buy energy stocks. So some of you all talk about things like what UTG, Chevron, energy sector, nuclear energy. Even energy is not just petrol or oil and gas. It's also clean energy, nuclear energy. So through all the discussion I have with you, I also learn from you. So I just share with you quickly, okay? So small component part is that I have a lot of interest in the energy sector actually right now, but I'm still very new, so I have been learning about energy sector. Because I just share with you right now before I do more discussion and more shots on it. Honestly, you think logically, I personally believe tech will be the future, AI, all these things. But if you think further one step behind, what is required to power AI? Energy, right? Energy. No energy, how to on your computer? No energy, I can't even on YouTube now and talk to you, right? So energy, I foresee that will be huge in the future. I know now it's being neglected, nobody really cares, and it's very fluctuating, especially oil prices, right? The Trump war, Iran or whatever. Every time there's something wrong with Straits of Hormuz, oil prices will spike up that kind. But I just feel overall energy sector, right, as a whole is still not very looked at, especially things like EV, clean energy, or nuclear energy even. That's why if as we passes, I mean not pass on, as time passes, right, as we move to the future, now we foresee 5 to 10 years down, okay, at least for me, I foresee AI will be the future, tech will be the future, automation, all this. But the one that power all this will be energy, and I feel energy is still undervalued now. So I'm studying energy sectors right now aggressively, and for now I actually have a bit of skin in the game. So I share with you how I do it. Because now I'm not an energy expert, right? I also not sure which energy ETF to buy, all these things. So I buy more ETF or SPY 500 or IWDA, that kind. Okay, because all these ETF actually has oil and gas energy sector in their component, in their index. So the top 500 companies like SPY 500 or IWDA or even any global index fund, right, all will most likely have energy sector. So indirectly, I'm getting exposure to energy sector. That's why one of the reasons I'm building up more ETF like IWDA or SPY 500, right, is because of energy. Okay, one of the key reasons. So I share with you all now, okay, since it's a stream, just chit chat. Okay, I just share with you my thoughts that energy is really a overlooked sector. Okay, people are neglecting. Imagine, okay, in the future we talk about AI, right? How much computing power we will need, to generate all the tokens and replies. But you think one step backward, who do power all this up? Energy, okay. If you go and look at Jensen Huang, okay, learn from him. He talked about what five components of the AI future. The most important brick, the core, is still energy. No energy, what to power? What AI are we talking about? What automation or robots? Nothing. Okay. So next time I'll try to cover more on energy. But I just want to say, it's thanks to you all, okay, through this chit chat, I learned about energy, okay. So if you all or if let's say, okay, you are invested in energy sector, please share with me, because I want to learn from you also. That time someone talk to me about EV, aircraft EV, aviation EV. Wow, very interesting, Instead of using petrol, gas, burn to fly, right? People use EV to fly planes. Wow, that means the lithium battery must be very powerful to fly planes eventually. Okay, so EV aviation, right, is something that, I think is interesting. So energy, definitely a sector to look at. And like I say, I don't like to talk about things that I don't have expertise. So I mean, you see option selling, wheel strategy, or talk about Alphabet, Microsoft, Apple, I'm okay because I vested and used them for years. So I have certain knowledge to talk about and share. But energy, I know nothing. What's there to share with you? You all can share with me instead, okay? I can learn from you, okay? Okay, so that's all for this part, okay? So before we move on to the last part, right, let's just quickly look at the stock market, okay? You see all the second screen, right? Bling, 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 bling. All the shiny light, like Christmas like that, Christmas came early, okay? Like nightclub like that, the second picture. Okay? So let's look at the stock market and we discuss any potential opportunity, okay? Because I also like to share with you the trades I make, all these things, okay? So let's just go look at the screen. Sorry, a bit laggy, my screen. Okay, so let's just see market overall. Wow, seems like a red day. Okay, we just see what is now on the downtrend now. Okay, so SpaceX, okay, still a bit down, okay. Nvidia at 195 seems attractive for potential cash cover put. Very, very attractive potentially, okay. And then got SPY, SPY, okay. So honestly, right now, if you all can see my last screen below, I have a lot of put options, okay. One of the put options I wanted to sell is a cash cover put on an SPY 500, okay. So if you catch my earlier stream, okay, don't mind I just repeat, I just a short repeat, okay, because some of you all may not have caught my earlier stream. When you sell cash cover put, right, personally, I cannot be greedy. You should stagger strike price, stagger your duration, and also stagger the companies you sell on. Imagine, let's say Nvidia, you love Nvidia, you sell all your options on Nvidia. If Nvidia really goes down, right, boom, you're gone case, really. But imagine I sell options on different companies, even ETF like SPY 500, okay? And then I also sell like Alphabet, Microsoft, Nvidia, all this. So if one companies really go down, right, I still have other put options to keep going on. Like I said, the wheel strategy, options wheel strategy, it's not really about chasing money, okay? It's about chasing probability and risk management. You want to always have high probability of succeeding. So you don't want to put all your eggs in one basket, all in Nvidia, sell options on that only. Nvidia really closed down one day, you're gone. Your real strategy is gone. Burn. Like your tire picture, bam! Cannot drive already. Stuck in the highway. Okay? So that's why I sell a variety of options on different companies. So one of them is SPY 500 that I want to sell a cash cover put on. I actually have two already on it. If you notice, there is a bit a longer duration, like 2 years, 1.5 years. I'm looking to sell two more actually. One in 1 year time and another one in about 6 to 8 months time, the duration. Why? Because I foresee, right, the US market will at least hold, okay? Like I said, Trump is in position. He will want to do whatever it takes to grow the market, okay? He's a businessman, okay? He wants the market to rally like crazy. Probably he has a huge stake in the market as well, okay? So if, I tell you honestly now, okay, if SPY were to drop by to like 1%, right, 1%, or even maybe 0.75%, right, I will sell a cash cover put immediately, 0.2 delta. Let me see. I click now. I don't know if you can see. I think can. Okay. So just look at SPY now. Okay, I've changed already. Hopefully you all can see. Later I show you all. Okay, so let's say 1 year duration, maybe 336. Okay. You all can see. Good. If I, okay. Let me just pull to it. Give me a while. Okay. Okay, at least you can see the bid and ask and the delta, okay. So 336-day cash cover put. So that's why, okay, I just explain a little bit, okay. So example, let's say, okay, we do a more active one. We got a more active one. Like example, let's say, just look at 30 days, okay, 30 days. Okay. So you can see that the change are all in green, okay. The premium are actually going up. Okay, like I said before, if the stock price, right, goes down, right, the cash cover put premiums will go up, okay. So I repeat, like SPY now, right, is down about 0.4%. The premiums for the cash cover put, right, will go up. So when the stock price go down and you sell a cash cover put, right, that's the most ideal situation. At least for me, okay, because the premiums are higher, okay, the so-called IV are a bit higher. Okay. So let's just look at 336 day, okay, because I want to sell 1 year, right? I told you SPY 500. So if SPY drop to 0.7, drop by 0.75 or 1% today, I will surely execute it, okay? No hesitation, okay? So let's just look at 0.2 delta, okay? So let's be, wow, come so long, 1 year contract, so many. Okay, so 0.2 delta means $645. Okay, the premium you collect is about $19 per share, which means 1,900 or 1,900 in short. So you can see, the higher delta you sell, right, means the higher strike price you sell, right, the premium is higher as you go down, right? Why? Because the more risk you are taking. You see, SPY 500 is now $750. For SPY 500, right, to drop 750 all the way to like 650, like example 650, right? What is the likelihood? What is the probability? I mean, it is possible, but less likely, right? As compared to, let's say, okay, let's say example, you set a strike price at $700, okay, $700. While the premium is $3,000, $30 per share. But for SPY to drop from $750 to $700, it is very possible, right? It is, So that's why the further strike price you set, the lesser premium you get. But the risk is much lesser. So that's the whole idea, okay? Remember, further strike price means further margin of safety. So I know some of you all are quite expert already, so I don't need to explain all this, but there are some viewers who are more new to option selling. So bear with me, okay, sometimes if I explain a bit more of the fundamentals. Okay, but I know most viewers who come to this particular stream or watch my video, most of you are actually quite advanced already. Like I say, I wanted to target to have a discussion, with these people. But everyone who wants to trade options, right? I really feel that it's good if we have a community, like just to chit chat, discuss strategy. So new or old, season or not, all are welcome. So if you are experienced, please pardon me a bit. Sometimes I talk more about the basic stuff, is so that everyone can also learn now. Okay, so we all can discuss. Okay. So simply put it, okay, I tell you all my trade plan right now. Okay, I will stick by it. Okay, when you have a plan, you must stick. Okay, don't deviate. If not, don't let emotion come into play. So when I trade stocks, right, especially when it comes to options. Usually I have a pre-assigned, okay, preconceived notion or whatever. Okay, I already plan ahead on what I want to sell, what I want to buy, and what are the macro and micro factors. Okay, if you watch a day in the life, I did a short, if you're interested, a few months ago, I think quite long already. Okay, I do a day in the life of a full-time option trader. Okay, usually before the market open, I will spend 1 or 2 hours to go and figure out the market really, to read the news, to know what my position are. So I tell you upfront, okay, if SPY drop, okay, 0.75 or 1%, okay, I will straight away sell a cash cover put at 650 strike price here and collect 2K premium for 1 year duration. Okay, so in case some of you ask, hey, why don't you just keep selling 30 to 45 days? That's the classical research methodology, so-called scientific backtrack data, to have the best risk versus reward ratio. Okay, to be honest, if we everything all sell 30 to 45 days, right, the day SPY decide to crash, and then within that 30-45 days, right, you have to take assignment. Okay, you never know, SPY can crash by 200. Don't say no, don't say no, it is possible. Okay, imagine SPY crash by 200 and then it stays that way, okay, from 750 drop to 550 and it stay there for 3 months. Your contract all 1 month, all expire, not worthless, expire, and you have to take assignment, gone case. You either suffer huge losses by closing all and then try to sell a further reroll. If you can roll, good luck. If you cannot roll, good luck. Or you have to take all the assignment, which is a lot of money. If you cannot afford all the assignment, you have to close some, or you don't want to take assignment, okay, you have to suffer huge losses. Okay, so that's why cannot be greedy. Okay, option view strategy is not for greedy people. Okay, it's for people who are patient, okay, want to make money consistently. So you see, you may think that, hey, you sell 1 year contract, only 2K, what's so little money? That's the trick here, okay? Imagine you stagger options all over. 1 month, 2 months, 3 months, 6 months, 9 months, 1 year, 1.5 year, 1.2 years, 1.8 year, 2 year contract. So imagine every few months you sell like 2 to 3 contracts and you stagger them. If you look at the whole totality, right, every month, okay, depending on how many contracts you sell, okay, you can easily hit like, depends, okay, 2K, 3K, or even 5K. Like me, I can hit like 5 to 6K. Okay, because now I also trade 1 DTE, which I maybe talk about it next time. But imagine you stagger all the options, it can actually be quite a decent amount of recurring income. But you must put some effort, okay, you have to really go and look at it a bit, do some homework, cannot be lazy, look at the micro and macro factors before deciding on your positions. What is your strike price? Do you want 0.2 delta? Or do you even want to be safer? You see, let's look at 0.1 SPY 500, okay? You see, 0.1 delta is 570 strike price, even further from 750. Very safe. Safe until cannot save. Even safer than the strongest Durex condom. Safe until cannot save. Okay? Safer, okay? Very, very safe. Thicker than the safest safest Durex condom you can find in the world. But the premium is lesser, okay? It's only $1,000. Okay, so it's about risk reward ratio. So it's up to you. Okay, I just share with you my trade. Okay, and I see how once it hit, I will execute it. And then if I can't get it before the stream ends, I can show it to you tomorrow. Okay, transparent. Okay, very honest. Okay, if it hits it tomorrow, I will show you the contract that I bought at that strike price, the duration, everything. Okay, I just share. Okay, so not financial advice. Don't quote me, okay, up to you. What strike price you want is up to you. Don't have to follow me. I picked 0.2 delta because of my cash flow and taking into consideration the US market will likely at least trend sideways. It may not rocket out like a bull, it might, but it more likely trend sideways because now there are so many bad news already. Iran war, Trump tariff, and the market is still quite resilient. It's not, in the past when there's tariff, right, wow, SPY dropped like 10, 20, 30%. Now with the tariff, the new forced labor tariff by Trump, nobody seems to care. SPY only dropped like what, 0.5 or 1%, right? So that's why I think likely US market should stay quite strong for now. Okay, personal opinion. Okay, that's all for this discussion. Okay, let just so hopefully lah, okay, SPY now is like down 0.5 already. Hopefully it can meet my 1% target. Then I'll quickly sell a cash cover put on it. Okay, and collect some premiums. Okay, next up, okay. Ooh, it's 10 o'clock. Okay, wait. Okay, let me see any questions or not. Let me see. Hey, once again, like I said, if I miss your messages, please, please just repeat it, okay? Please feel free to repeat it, okay? Okay. Hey, hi Barry. Good to see you here. Nice meeting you. Thanks for. Hey, Yaf 71. Yeah. Hey, also Yaf 71. By the way, I'm also late lah. I'm late like 9 minutes because my OBS streaming got some problem. Okay. Hey, Yaf 71. Hope you're doing well. Okay. By the way, just to share, Yaf 71 has been here for all the past stream. Okay. So very fortunate to be able to meet him and happy to see me as well. Okay. And Yaf 71 also. He has his own investment so you also can learn from him. Okay, so happy to see you, Yasan. I hope you're doing well. You just ended work late again, is it? Night shift, cai fan again, cai fan or claypot rice. Okay, so by the way, Singapore got a few dishes. One of the popular ones is called cai fan, economic dish. You buy a plate of rice and you pick the dish, pick, then you pay the price. Okay, so Yasan, I hope you're doing well as well. Hope you have a great dinner. Hope work has been good for you, smooth. Hope bosses not too mean, okay? What are you doing? Cause it looks cool. Yeah, Barry. Hey, like really cool. I love you, okay. Hey, by the way, happy to see you, Barry. I hope you also trade stocks. Okay, even though you don't trade options, right? I hope you are, vested in the market, have some assets. Because to be honest, with the hyperinflation going on now, honestly, okay, I feel like just my personal opinion is that if you don't own shares or don't own assets, right, it's very hard to even stay afloat nowadays. Okay, nowadays salary are getting depressed. People are losing jobs, and then economy, inflation crazy, and if you don't own any assets, right, you will be way behind the curve. Way behind. Okay, I mean if you're at least on the curve, following the curve, still okay, but just a regular job for average person like us, right? If you don't own asset in this hyperinflationary environment, your salary cannot keep up. You'll be behind. So hopefully you do have some form of shares also lah. Okay, hope you are doing well as well. Thanks for mentoring, bro. Hey, thank you so much. The quiet freedom. Hey, thank you so much. It means a lot. Okay, I'm glad that you learn something from me lah. Okay, bro. Okay, I hope you also do well. Okay, the quiet freedom. Okay, if you own any shares or stocks, you also can share with us. Okay, you be your whole options or ETF. You can let us know, and then if you want, we also can try to comment and give you some ideas, or maybe you can give us ideas also. Share with us your takes and what are the shares you hold. I'm also very keen to know what shares you hold. Like someone shared me things like ARMS, TSMC, that kind. So interesting also to learn from you. Hope you also making money. Okay, hope everyone can make money and have a better quality of life. Okay, end of the day, we just want a better life for ourselves and our loved one, and of course for you all, my friends. Okay, for you all too. Yes, Foresight Energy ETF. Okay, Yaf. Hey, Yaf, you got ETF energy. Which energy you own? So are you do you own any energy ETF in particular? Like any recommend? Okay, not say recommend. I mean recommendation is fine. Okay, like I said, I won't blame you if I lose money. Okay, you can share me some of your energy picks or even some ETF. Okay, I know the one I read now is mostly a Chevron. I think what ONG. I can't remember. Yeah, I'm still learning. Okay, I'm still learning about energy sector. Because someone recommended me some nuclear energy, which I think has huge potential, really huge potential. Of course, there's downside to nuclear, like the Fukushima, that kind of thing. But I think if nuclear done correctly, if it's well contained, could be safe enough and potentially be a huge thing in the future. Because nuclear, right, is cheaper, smaller, and can power a huge amount of, even power up a country, you know. That's the power of nuclear energy. Okay, okay, I just talk quickly about the last component, okay, just last component. Sorry to, okay, so the last component is for Singapore stocks. Singapore stocks, okay. So if you are not interested to hear about Singapore stocks, you want to call it a day, it's fine, it's fine. Thanks for dropping by to just chit chat, okay. I try to keep Singapore stocks discussion behind because some of you all, yeah, don't want to hear about Singapore stocks. You all are not local, not Singapore. You all prefer the US options, that kind of stuff. Okay, so I just quickly share with you all a bit of my thoughts on Singapore stocks, okay? And then we will call it a day. Okay, we keep the stream short, so don't hold your back further. Okay, let me see my Singapore stock. What do I want to talk about? Yo, where is it? Where is it? Wait. Give me a one more. Okay, in short, actually no need. Okay, I just tell you all my opinion now, okay? So Singapore stocks, okay. You know, I did a short recently that I told you all I sold all my Singapore stocks away. Okay, I still have a few left, but I'm selling. I plan to liquidate all my Singapore stocks because I want to channel more fund to the US market. Reason being because US dividends or this company only like 5% return a year, where I can get 10% return a year in an ETF. An ETF is probably more diversified and safer than just buying a few REITs or even banks from Singapore. Okay. Now, the biggest question I get now is, will I ever go back to Singapore stocks? Will I ever invest in Singapore stocks again? Short answer is yes, only if the yield comes down to 7%. Okay, 7%. At least, okay? Why? Okay, so if the yield don't come down to 7% at least, I see no value in, like, buying Singapore stocks right now, because the US market is giving way more. Like, not just US, you just look at a global ETF like IWDA, okay, domicile in Iran. It tracks global developed countries like Australia, Europe, US, Singapore, all these things. Itself is already giving like what, 8% at least, or even 10%, average 9 to 10%, and it's diversified. And even as Singapore itself, okay, plus worldwide globally, why would I want to go for Singapore stocks only when it's only giving me 5% yield? I cannot get it, okay? But if the yield ever comes to like 7%, okay, one day, okay, there are good companies in Singapore like Fraser Centrepoint Trust REIT, or Capital Land, Capital Commercial Trust, that kind, if ever that kind of REITs or banks can give 7% yield a year, I will definitely come back. Why? Because 7% yield a year, right, could potentially actually mean a little bit more, like 8-9%. Okay? Because I have to factor in I'm local, okay, Singaporean. I'm not spending in Singapore currency. So because Singapore company will pay me in Singapore dollars, so US dollar, we have to acknowledge it has been trending downwards, and it could trend further downwards a bit more. So there's a forex risk potentially. Because I'm not in Singapore, all the spending in Singapore, yeah, I earn 10% in USD, but if convert here, if there's a down like what, maybe 10 cents or whatever, I might have to lose like what, 10%, 10 to 20% from my profit margin. So forex risk does play a part. Of course, I know, forex, right, is not tied to company, because companies are not tied to currency, right? Okay, if let's say it's now worth 100 US dollar, right, and maybe Sing dollar, it will be converted accordingly. So example I just share with you. Okay. Example, okay, IWD or ETF, let's say SPY 500, okay, top 500 US company, okay. Today SPY is worth 100 Sing dollar, okay. Sorry, 130 Sing dollar, which is equivalent to 100 USD, okay. Example. Okay, tomorrow forex down, okay, US is down like whatever, maybe 10%. Okay, US has slide down against Singapore currency. It doesn't mean the ETF now become less valuable. No, okay. the ETF, the USD will just adjust, no? So maybe it will go up by 10%, no? So instead of maybe being valued at 100 USD, it will trend upwards to maybe 110 USD, 120 USD. Okay, so remember, companies are not tied to a currency. If there's any forex increase or decrease, right, the company will automatically titrate upwards accordingly or downwards. But that will happen over a longer period of time because forex, right, I mean, it's immediate, you know, the currency change is immediate. But to reflect it in the company, right, it does take time. So that's why if you tell me today forex, okay, USD is slight 10% down against Sing dollar. Sing is more valuable. USD is less valuable. I need to spend more USD to convert to the same amount of SGD to get to spend it. Okay, example. So that's why if you sell the share immediately, you will get hit by the forex. But in the longer run, right, it will kind of equalize. Okay, so I have to take into consideration this short term. Okay, I acknowledge it. Imagine I need the money. Okay, and then I sell some of my USD stock. Yeah, I will suffer, right, because I'm holding USD. Then I have to convert to Sing dollar to spend, and then, well, I'm getting less Sing dollars now because Sing dollar is appreciating too much. So that's why, right, if you buy Singapore companies, there's this value in the forex because Singapore currency is very strong and Singapore currency has been trending upwards. So the fact that Singapore currency is trending upwards, right, itself also gives you some value. The fact that you get paid in Sing dividends, all these things, right, you do get value for that. Okay, so I acknowledge Singapore company has value in that sense because the currency is strong, government is very strong and robust, and the currency been trending upwards. And if you hold Sing dollars, you are very happy, to be honest. It has appreciated against a lot of currency, be it the ringgit, the rupiah, the yen, Japanese yen, or USD. Okay, so but in order for Sing dollar to be in order for Singapore companies to be attractive enough, the yield has to be at least 7%. Okay, because even with the forex decline, right, let's say USD is sliding downwards, right, because the yield is 10%, it is still way more than 5%. Even I convert the currency here and there, you know, I'm still up if I invest in US company. Okay, so that's my take for Singapore companies. So personally, okay, just my personal take, if I ever go back to Singapore companies, I start buying Singapore companies again, the yield has to be at least 7%. Okay, if it's 4-5%, no way. Okay, no way, red card. Okay, so that's all for my stream. Okay, let's just answer some questions if any, and then we will call it a day. Okay, still looking at, okay, our research DTCR and IPO. Let me write it down. Okay, I'm that serious. Okay, I really want to go right now. Let me see. DTCR and AIPO. Okay, what is your outlook on Singapore stocks? Singapore REIT like to combine companies. SG bank gain is crazy. I think we'll got more. Yeah, okay. So personally, my take, okay, just quickly answer your question is, personally, I think banks will continue to trend upwards for Singapore. Okay, like it or not, Singapore is slowly becoming a very strong financial hub. You know, billions of dollars are coming in fact trillions potentially. Okay, rich people, wealthy people want to park money in Singapore. Why? Because Sing dollar very strong currency. They love Sing dollar. Secondly, our government is very robust. Okay, whether we hate the government or like the government, right, we are a very tight country. You know, it's run very tight like a virgin. Okay, very tight. Okay, so Singapore government is very strong in all the law and mandatory, so people like stability because a country that's run tight, it will be very stable, and wealthy people like to park money in stable country. No one want to park money in some random country, like, you know, anytime can change the law. Okay, value can decrease, like rupiah. You know, imagine I put 1 billion rupiah. Okay, next day can be worth $1,000, that kind. You know, nobody want that. People want to park money in strong country. And because when all these wealthy people park money in this country, right, where do they park? Banks, right? You know, they put money in bank, private banking, wealthy banking. So all these banks, right, will earn money by investing in their money. Or when all these wealthy people transact at the bank, right, or choose to buy some products, the bank also sieve out money through that, be it commission. Okay, so they earn two ways, you know. Either they take commission through the products, or they take their money, give them a 1% interest or 2%. They put it in the SPY 500, they can earn 10%. So they can earn the difference. So bank will likely trend upwards, okay? And yeah, low tax heaven for the rich. Yeah, Singapore REITs are, one thing I hate about Singapore REITs also is they like to issue new shares, placement and placement, like nobody business, you know. No enough money, placement, create new shares, you know. Or sometimes private placement, don't even let retail investor like us participate. Where got fair, right? And then sometimes are the worst, they give private placement at a discount. What a joke, man. Hello. You give private placement, you don't let retail, you know, people participate, and then you stay there to give them a discount, you know, give all these private, you know, investor a discount for new shares. Oh, I cannot lah, this too much, way too much. And then you're right, combined company, put the losing, no money, not money losing, put the non-profitable, loss-making company, the REITs, right, combine with the profitable one, then give it to you. Ridiculous, really ridiculous. So that's one downside of the REITs in Singapore, like, you know, placement dilution. And that's one thing I also don't like it, okay? But like I said, if they ever come out to 7% yield, and they are good quality companies, I think Frasers and Capital, right, the two brands, especially for REITs, right, is still quite strong. So I will still be keen to invest in them. Like, if I mean, they do placement, all these things, sometimes they do merging, all these things, but I feel they are at least more ethical, you know. When they merge company, usually they at least merge those can make money on, okay? They merge things like, I think recently got some merging, right? I think, can't remember, Fraser Centrepoint Trust, they bought or sold some malls, right? They are actually profitable one, okay? Actually making money, good ROI, not those loss making one. Okay, Ken, okay, so that's the end. Thank you so much again. Very happy to see you. Same pain also. Our research definitely into DTCR and IPO. Thank you so much for sharing about this energy sector. And if you have knowledge, feel free to write more. Okay, I really want to learn more about energy sector, because really the future, I think energy very underlooked, or not say underlooked, maybe not being given enough attention. Okay, that's all for my stream. Okay, that's all for my stream. I want to say thank you so much for dropping by. Okay, same thing. Okay, I stream Monday to Thursday, 9 p.m. Time zone is GMT+8. Okay, so tomorrow same time, 9 p.m. I hope to see all of y'all there. Okay, I really appreciate y'all dropping by, saying hi or asking questions, sharing your thoughts. Okay, I also get to learn from you. Okay, so see y'all tomorrow. Okay. Goodbye. See y'all. Bye.